In 2019, the average home in Sudbury sold for around $265,000. Today, that same home is selling for over $500,000. That's not a typo, and that's not a GTA headline. That's right here in Greater Sudbury. Of how we got here, and more importantly, where we're going next, is something every buyer, every seller, and every homeowner in this city needs to understand. I'm Danny Manford. I'm a local real estate agent, and this is your market update. No fluff, just facts. I do these market updates because I believe information is the most valuable thing I can give you. Not a sales pitch, not hype, real data, real context, real perspective, so you can make real decisions. Today, we're going 3 layers deep. Layer 1, where we were. The full arc from pre-pandemic Sudbury to the peak, the correction, and the recovery. Layer 2, where we are right now. The actual numbers from 2025 and early 2026, and why Sudbury's story is very different from the rest of Ontario. Layer 3, where we're going, what the forecasts say, what the HST rebate changes, and the honest truth about what I think happens next. Let's go. To understand where we are, you have to start at the beginning. And for our purposes, 2019 is the right baseline. In 2019, Greater Sudbury was a steady, affordable Northern Ontario market. Average home price, roughly $265,000. A detached home in a decent neighborhood was accessible. First-time buyers could get in, move up. Investors from the south hadn't really discovered us yet. Then came 2020. COVID changed everything. People left cities, remote work became reality, and Sudbury, with its space, its lakes, its lower cost of living, became a destination. Demand exploded. Inventory couldn't keep up. By mid-2022, the average residential resale price in Greater Sudbury had climbed to around $452,000. That's nearly double a decade earlier. Then the Bank of Canada started raising rates aggressively. By early 2023, rates had climbed from pandemic lows to over 5%. And like markets everywhere, Sudbury cooled. But here's what's important, and I want you to really hear this. Sudbury didn't crash. When the rate hikes hit, the average price pulled back and settled around $481,000 in 2023. That's a modest correction. Prices didn't crater. They found a floor and held. Why? Because the fundamentals here are real. We have a vacancy rate well below 2%. We have a growing population. We have a mining economy, and we have a chronic shortage of housing supply that didn't just disappear because interest rates went up. The COVID boom was real. The correction was real. But the underlying demand, that's not going anywhere. Here's your current picture in 2025. Sudbury's average residential sale price rose 5.7% year over year from $480,000 to $550,000. Sales transactions increased by 2% and total listings increased by less than 2%. At the same time, across Ontario, the average sale price dropped 5.2% year over year. Sales across the province fell. Inventory climbed. In October 2025, Ontario's months of inventory was 4.6 months, 2.5 months, nearly half the provincial level. Sudbury's not following the Ontario script. Now, January 2026 saw 106 homes sold. That's down about 16% from January 2025. New listings dropped sharply too. Months of inventory came in at 3.3. The average price in January 2026 was $470,000, a 3.4% year-over-year increase, but lower than the 2025 annual average. January is always a slower month. Seasonally is real, but there's also something else at play. Buyers in late 2025 and early 26 were cautious. Trade war uncertainty with the U.S., concerns about the job market, questions about interest rates. That hesitation is real and it's understandable. But here's what hasn't changed. Inventory is still historically low. We still have under 3.5 months of supply, below our long-run average of 4.9 months. The vacancy rate is still extremely tight. And the demand from first-time homebuyers who simply cannot afford to keep renting. Rental rates here have more than doubled over the last 20 years. From $605 a month in 2003 to well over $1,300 today, with a vacancy rate hovering 1%. When renting costs more than owning, people find a way to buy. This is a part everybody wants to know. And I'm going to be straight with you instead of just telling you what sounds good. Here's what the forecasts say. Industry leaders are calling for a 5% increase in Sudbury for 2026. The Canadian Real Estate Association is forecasting national sales to grow over 5% this year and calls out Ontario as one of the provinces with the most room to recover. Korea's own data shows pent-up demand from first-time buyers as the single biggest factor underpinning activity this year. Then there's the HST rebate. As of April 1st, eligible buyers of new construction homes in Ontario no longer pay the 13% HST for savings up to $130,000. Sudbury buyers benefit more from this than almost anywhere in Ontario because most of the new builds fall within the 1 million threshold. The full rebate applies here. Here's my honest read on where Sudbury's going from here. We're in a window right now. Inventory is still tight. Interest rates have been coming down. The Bank of Canada cut rates to 2.25 in late 2025. A brand new tax incentive just landed that benefits construction buyers, and pent-up demand from first-time buyers is real and it's documented. The fundamentals of this market, economy, population trajectory, supply constraints haven't softened. We see the spring 2026 market pick up meaningfully from the slow January. Not a frenzy. I don't think we're going to go back to the pandemic chaos in 2021, but a steady market where well-priced homes move. Buyers with good preparation succeed, and sellers in the right price range do very well. The Sudbury's market isn't going on sale. It's not going to crash, and it's not going to stagnate. It's been doing since 2020. Hold its ground while larger markets wobble, and reward the people who take it seriously. If you're thinking about buying, this spring and summer window is meaningful, not just because of the HST rebate, but because you'd be getting in before the next wave of buyers who are watching from the sidelines right now. If you're thinking about selling, you still have the pricing power in most segments. Detached homes are in demand. The story for sellers is about preparation and pricing, not panic. And if you already own a home in Sudbury, your 2019 purchase that cost you $265,000 is worth north of $500,000 today. That's not luck. That's market rewarding ownership in a fundamentally sound city. Every week, I'm in this market, watching the listings, watching the sales, talking to buyers and sellers on the ground. That's the perspective I bring to these updates. If you want to go deeper, if you want to understand what your specific situation looks like in this market, whether you should be buying, selling, waiting, or moving, that's exactly what I'm here for. My buyer access program is free. The link is below. It's built for Sudbury buyers who want to understand the market before they make a move. If this video gave you value, subscribe. I do this every week, so you never have to guess what's happening in your local market. I'm Danny Manford. This is Sudbury Real Estate. I'll see you next week.